You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO. This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was, and indeed still is, on the futures options side of the fence. What's going to make it on the show? That's why you have to tune in every week. We don't know. Until we crunch the numbers, listeners, is going to be ags, metals, rates, FX, equities, energy. You never know. Crypto. What's going to make it on the show each week? My name, of course, Mark Longo from don't forget the optionsinsider.com is the place to go to see all this great content we have going on throughout the day, including a little thing called theoptionsinsider.com/pro. That's the place to go to get access to all of our stuff for the member folks over there. 200 plus episodes of content waiting for you the second you hit that button. Of course, great giveaways. Congratulations to Mackenzie winning our Grow Trading Crate, as well as, of course, live shows and more exclusive episodes every week over there. Theoptionsinsider.com/pro is the place to go to enjoy all of that content. And speaking of enjoying some content, our guest today in the old CME hot seat produces a little bit of content of his own that we can heartily recommend. None other than Mr. Dan Gramza from dangramza.com. Dan, welcome back to TWIFO, sir. It has been too long. My producers are telling me it's been 2 months. Seems like we just talked a little while ago, sir.
Oh, my gosh, really? That does surprise me, Mark. I feel like it's been maybe a few weeks ago.
Yeah, I thought it was like 3 weeks, maybe. No, 2 months. It's been a while. It's been an eternity, sir.
Wow. I don't know if it's a good thing or bad thing that time slides by like that.
How are you enjoying all this fun Chicago weather we're having, sir?
Well, yesterday was interesting.
Yes.
I was just on the outer edge of those storms that came through. I was out and about and happened to be coming back towards Evanston just as things passed along. So I missed a lot of that drama. But boy, it was an interesting day, shall we say.
Yeah, it was nasty. They were saying there was some stuff bearing down right here on the studio here in the West Loop, but you don't get stuff heading towards downtown Chicago. Hit both airports, Midway and O'Hare. It's never happened before. So, yeah, intriguing stuff. What's the old saying? May you live in interesting times. We are all doing so together, listeners, because it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, let's get to it. Let's see what's lighting it up to the light side and to the dark side. Mr. Dan, you know the drill. Where should we begin our journey this week, sir?
Well, I find the light side very exciting. Shall we start there?
It's a good choice because there isn't a heck of a lot of dark side this week. It's almost all green. We haven't seen this in quite some time, Dan. It's a very biased. True. I would say it's close to 90% green this week, listeners. So everyone who says sometimes correlation doesn't go to 1, well, look at the stuff this week. We got a lot of green on the screen here, listeners. Let's start at number 5 to the light side, listeners. We are starting in the metals with copper getting a little base, up 5.64%. this week. Number 4, we've been talking for a while now about these energy sector futures from CME, breaking down, carving up the S&P in some interesting different lights. And the energy sector coming on our radar this week, up 6.33%. It was number 5 in the other direction last week, off about 2 2/3%. So a little bit of recovery there. Number 3, we got our old friend WTI taking a bit of a lift, up 6.37% this week. So going from the energy sector and the equities to the energy complex itself with WTI. Number 2, going back to the metals, getting precious this time. It's platinum, up 7.87%. And the number 1 light side mover on a very light side heavy week this week, it is staying in the metals. It is silver, up 8.65%. So quite a banger week here for silver. Uncle Mike, I just talked to him on our last show. That's why he's so giddy over there. Now to the dark side. We've been talking a lot of ags on the show lately, listeners, and they are back on the radar. Some of the few red we have on the screen this week are to be found in, looks like, actually, I take it back, it's all ags to the dark side this week. So the only red we can find in the ags complex. Number 5, Chicago wheat, listeners, off 2 1/3%. Number 4, it's the big dog. It's corn, off 2.71%. It was number 1 in the same direction last week, off nearly 5%. So again, rough couple of weeks here for corn. Number 3, KC wheat, off 4 1/4%. It was number 4 in the other direction last week, up 5 3/4%. So given most of that back now this week. Number 2, it's oats, off 4 3/4%. It was our number 1 light side mover last week, up over 10.14% to be precise. So oats has been moving and shaking. Before you get all excited, listeners, no paper to talk about, so not going to be sinking our teeth in there. And then number 1, still staying in the ags, this time going to the livestock. It is lean hogs, off 14.67%. So lean hogs collapsing this week, listeners. They were number 3 in the other direction last week, up nearly 7%. So pretty much 2x that now to the dark side. So giving all that back and then some this week. So an intriguing week. Dan, we have quite the selection here in our movers and shakers. We've got metals, we've got ags, we've got energy. Should we start in one of those, or is some other complex catching your fancy? Where should we begin our journey this week, sir?
Well, how about if we start with the precious metals?
All right. To the land of the metals we go, listeners.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, you know where to go to find all this good data for yourselves. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires out there. Once you're there, go almost all the way down to the bottom of the list, pretty much one above. The bottom of the list is vol indexes, but right above that we have metals. Then we're going to go, well, it depends where Dan wants to go, where we start, listeners, but we do have silver lighting it up to the light side this week, up 8.65%. Dan, it's like you and I are on the same wavelength. Before the show even started, I fired my screen up to silver, so we're on the same wavelength, sir.
Oh, good.
Silver obviously popping this week, up 7.5% just since Monday. Of course, you go back to the end of our show last week, is up 8.65%, trading at about a 25 even in that front future right now. So quite the run here for silver. Also looking at some decent paper. I mean, silver, it's not, the E-mini or 3-month SOFR by any means from a volume perspective, but a respectable week this week. 31, almost 32,000 contracts on the tape already this week. Mr. Dan, what is catching your eye out there in silver and the rest of the shiny stuff, sir?
Well, when it comes to silver, I think there's a few things that seem to be converging on this market. One is we have a weaker dollar. That has an influence. Silver and gold and platinum, there are what I call excuse markets. In other words, they have a tendency to respond to uncertainty, high inflation, weaker dollar. And right now we're seeing some response, I think, that helps fuel this move is the weaker dollar. The other thing that's unique when it comes to silver versus gold is the demand that we see for solar cells. It's a part of the construction process there, and we're seeing a lot of demand coming from that area that we typically hadn't seen in the past. So we have some demand out there that's fueling this. We have a weaker dollar that's helping this market. Structurally, right now where this is trading, if it closes here today, we're going to be technically in an uptrend. So this would define an uptrend because it's closing above the previous swing high that we had back in June, around the middle of June. So price-wise, it's interesting. The other thing I think we want to keep in mind when it comes to silver is that when people think of precious metals, they usually turn their attention to gold. But silver can really lead the way. It's a market that can have some volatility like we've seen just in the last 2 days. We're having follow through today. We're not really seeing that in gold. So it's the healthiest between gold and silver right now. I'd lean towards gold. So you look for that volatility to continue. What's also going to be a tell, I think, for this market is what we do tomorrow. And that is this. If indeed buyers are here, like we've seen for the last 2 days, we should be closing above 25.25. If we don't do that, look for a sideways move on Monday. Or do we see this market backing off tomorrow? As you mentioned, we're trading just a hair above 25 even. And if we close down tomorrow, that would imply a lack of confidence that these buyers who have stimulated this market, maybe they're taking profits, or maybe it's gotten high enough that it's finding new sellers coming into this market. People feel it's overvalued. Now, the answer to that, if we close weaker, will be Monday. If we continue lower, that implies maybe we're looking for more of a break. If the dollar gets stronger, look for this to cool off also. But on the other hand, if on Monday we go sideways, well, that could have been profit taking going into the weekend. That means you would look for another leg back to the upside. So how we finish tomorrow, I think it's going to be important when it comes to our friend Mr. Silver in terms of future expectations. If we look at gold, that market has a little different take for today. Yesterday, it did take off. We saw the dollar weaker. I think that was the primary stimulus here. And remember, high inflation can also stimulate gold. And we're seeing that cool off a little bit. So I think it's more of a dollar play. It's not so much uncertainty that can create that kind of movement. I think the market is now creating, I would say, an outlook based upon what they're seeing for the Fed. And, I believe what we're seeing in the dollar and stock indices in these metals, they're anticipatory trades. In other words, they're anticipating what the Fed may do. We have seen what? We've seen some economic numbers cool off a bit. So do we expect the Fed to maybe not increase interest rates this month? No. The plan is they're going to. The CME's Fed Watch is showing like an 89%, 25 basis point increase. However, maybe afterwards they are going to cool off and let the market absorb what's happening. And I tell you, Mark, I hope that's what they do. Because when the Fed makes these changes, as you know, the market reacts instantly. Our economy takes 6 months to 18 months to cool off. And if the concern is, if the Fed continues to make these changes, well, at some point we're going to have a tsunami of change in our economy. And that's where this recession issue comes into play. And plus, where we are right now is where in 2007, 2008, when we were at 5.25%, we had a recession. And in late 90s, in 2000, March of 2000, we hit 6.5%. So we're in that range. So the market's saying, holy Toledo, we're in this spot where we've had recessions before. Oh my gosh, I hope the Fed doesn't overdo it. And the Fed doesn't want to overdo it. But on the other hand, the Fed says we're not at 2%. But so it's that delicate balance. That's where we are. And I think what we're seeing here in silver, going back to this market, is that anticipation of what can happen in the future. I look at fundamentals as anticipation, which is what we're seeing here, unexpected, a shock fundamental. Nobody knew it was happening, and it happened. We see expected fundamentals. So we expect of the first Friday of the month unemployment numbers. So there's a variety of ways that I think you and I can break down fundamentals. Right now, I think we're in that anticipatory trade. So gold, it's in the same boat that silver is. Do we close positive going into the weekend? There are big challenges ahead for gold that we don't have with silver. 1970, 1980, 85, 1990, 2000. Those are all challenges that gold has to overcome. And if they're going to do it, we want to see them do that within the next couple weeks. If they don't, look for a sideways move. Or again, if the dollar gets stronger, look for gold to cool off. And the biggie right now is 1970. It's traded near it today, but it hasn't closed through it. You'd want to see that on Monday, close above 1970. It says something about buyers still here in this market. So I'm not necessarily bearish on gold, but I think we should be cautious on that market. And it's a whole different ball game if we think about staying with metals. If we think about our friend Mr. Copper, there's a few things going on with that market. The dollar also has influence here, and we're seeing this market firming up over the last 2 days, more akin to what we saw with silver. Challenges: $3.96. $4. Those are going to be big numbers for this market. I do not expect a huge move on Monday or on Friday, tomorrow, like we're seeing right now. I'd look for a smaller range day, but ideally we close above $3.96. That's what you'd want to see. That would give us that idea of confidence going into the weekend. But the things that kind of mystifies me, I'm bullish on this market. I have been for a while. But Here's where the challenges come in. Well, first, when it comes to copper, we have the demand from China just isn't there. You know, when everybody thought when they get this doggone COVID behind them, that economy is going to turn on and we're going to see demand. They consume 48% of the global copper market, so they're a big deal when it comes to this marketplace. If we think about the warehouse storages for all the exchanges around the globe for copper, it's down 55% since March. So supply a little tighter. And think about our friends in Chile. They're the top producer for copper. They're down 14%. Production-wise since May. So we're seeing some supply tightening up. We're seeing demand not coming up to the level you'd want to see for sustainability. So China is still not there yet. But we're also seeing a transition to energy-saving products. Well, when you construct a battery right now, copper is a big part of that. And so that demand, as we switch more and more to electric vehicles, we expect that to go up. Something else to watch is home construction. We use 400 to 600 pounds of copper in a new home. 44 pounds and 99 pounds of copper in a new car, 4 times that amount if we talk about electric vehicles. So it's a market that is built right now in the time of our economy and our cycle of what we're doing and it comes to energy that we expect demand for it. And right now it's responding. But boy, I think the next few days, it's going to be very important for that market. So keep an eye on it. And I think long term, we have a chance for much higher prices.
A lot to unpack there, Mr. Dan. You left me some wiggle room here, so I'm going to slide in. First, let's start with silver. That is, of course, our big mover and shaker to the light side this week. As I mentioned, hanging out right around the 25 level, just dipped below it a little bit as Dan was talking, so he spooked some of the silver bulls out there, but still up strong on the week. Listen, like I said, about 33,000 contracts on the tape right now, so a little bit more ticking in out there, and about 27% of that paper going up in the contract that goes away in about 13 days, expires on July 26. We're going to hang out there, listeners. What is the volume? You might be asking in silver right now. And again, it kind of depends where you're looking on the term structure. But right out here, about this 2-week level, right around 13 days, it's at about 23.5, up 2 points exactly. So again, looking a lot more robust. That's about 10 points exactly above where equity vol is right now. So a little bit more robust than some of the other products you might be used to trading out there. In terms of skew, what are we seeing out there? You know, traditionally the bid for the metals is to the upside, and we did see that. But last week, most of that's gone now. I guess they're taking their money and leaving after this big pop they've had over the weekend. Who can blame them? Last week, the puts 3% cheap. The calls 5.3% bid. So all that juice is to the upside. This week, most of that is gone. The puts have swung to 1.6% bid, and the calls are pretty much flat, only about 0.75% bid now. So a lot of that juice that was to the upside made some sense why folks were leaning that way, because looking pretty good here from an upside perspective, even if all that skew is now gone. In terms of action, what was the big dog out here this week? We actually have to go all the way out to the September contract to find that, listeners. It's the September 26s. Going up about 1,300 times this week. Almost all of that today, 1,142 today, about 100 and change yesterday, and then small amounts the rest of the week. So it's like mostly opening. Today's paper we don't know because there's about 2,300 contracts open on that strike already, so they could be taking some off. But SEP 26s, interesting. Let's look and see where that future is. That future is still hanging out right around that same level, about 25. So intriguing stuff out here. If that's not enough distance or upside for you, listen, let's go a little bit farther out and a little bit farther up the chain to the DEES 27s, listeners, going up nearly 1,000 times this week as well. Unlike the other contract, though, nothing trading today, a big goose egg today. We have 800 going up on Monday. It looks like there might be a fly going up. Looks like the DEES 25, 27, 29, so it is symmetrical, going up 400 by 800 by 400 times, opening on all of those strikes So interesting. 27 guts fly going up 400 by 800 times in silver. Kind of interesting. Not the first time we've seen flies going up to the upside. That does seem to be a very popular trade in a lot of the metals to the upside. And it makes sense. You get advantage of if you're buying it, you're selling two of farther out of the money calls. Usually that call skew is pretty juicy, so it makes it worth your time to do that. So interesting. You like those strikes, listeners? 25, 27, 29. Somebody does, to the tune of about 1,600 contracts in that one trade. Let's just scroll around a little bit, too. We also have the 2340 calls going away in 13 days. Interesting strike there, going up about 600 times. Again, all of that today. So interesting how much paper is flocking in today. Well, yeah, we had the number yesterday, so that makes some sense. But still, just intriguing stuff. How much paper is going up today here in silver? But it's not all silver, listeners. It's a lot of silver. But in our light side, we had silver, we had platinum, and we had copper. You heard Dan break down a couple of those out there. Let's get base next, because volume-wise, copper is coming in right behind silver. Obviously, neither of them are going to touch gold, but an active product, and certainly a lot more active than it was when it started. And we started, I should say, when we started recording this show many years ago now. 21,000 contracts on the tape for copper. Copper hanging out just a tick below $4, $3.95 right now, up about, looks like about 17 cents or about 4.3% just since Monday's session. And where is that 21,000? Where's the lion's share of that going? About 60% going up again in that contract that's going away in about 13 days on the 26th. So intriguing. And what is the volume? You might be asking out here in copper. It's about 2290, so very similar to what we're seeing in silver, up about 2.8 points as opposed to about 2 points in silver, but still interesting. Very similar vol levels here. In terms of skew, last week the puts were kind of flat and the calls were 1.8% bid. This week the puts have swung to about 3.1% bid. The calls 1.7% offered. So similar skew action out there. The puts a little bit more bid in copper than they are in silver, and the call bid was not as extreme in copper, but otherwise similar movements out here. And it seems like the 410 calls, the 4.1 calls leading the dance out here this week, going up about 3,700 times. All of that today. Looks like it's a 410, 4/4, just straight vertical, going up 3,600 times today. And it's all opening because there's no OI on this strike. So 410, 4/4. We do see some funky paper in the metals, listener. That's a pretty tight vertical to put on and push 7,000 plus contracts through. I guess somebody really likes their broker out there, listeners, but intriguing stuff. And then also the 5 calls in December. This makes a little bit more sense, given the fact that we're hanging out at about a 4 right now. These went up about 1,200 times this week. The big day is mostly today. Got about 500 on Tuesday and about almost 800 going up today. So intriguing stuff out here. Worth noting, the volume is pretty much exactly even to the OI, so it could be closing paper today. But intriguing stuff out here in copper. We do have platinum lighting it up, but platinum's not a huge mover list. There's only 12,000 contracts. So instead, because Dan touched on it, and it is the big dog in the metals complex, let's do a real quick run through of gold as well. Gold coming into showtime, threatening that 2,000 level again, 1964, up about 32 points or about 1.65%. Since the start of the week. 153,000 contracts on the tape. So that gives you a sense of where gold falls versus the others. Silver, you're talking 5x silver, and you're talking over 7x, almost 8x for copper. So intriguing stuff here volume-wise. In terms of the action, 32%, so pretty much exactly a third, going up again in that contract that's going out in about 13 days. So we're going to hang out there as well. What is your gold vol? Now, gold's never been known for historic vol levels. When gold vol is popping, you know something truly aberrant is happening in the market. And that's the case right now. Gold vol 10.5. So if you're wringing your hands over VIX saying, wow, it's so low, allow me to present to you gold vol 10.5, unched on the week. So an interesting week out there for the metals. Gold vol unched, at least for right now. Skew-wise, something similar to what we saw in the other two. The puts were 2.4% cheap, and the calls were nearly 5% bid. Most of that gone now. but puts are flat and the calls are about 1.4% bid. So again, we got a nice little up move. So some folks probably taking those calls off. In terms of action, what was the biggest print out here in the metals this week, listeners? And usually it's some far upside stuff, and that is the case. But we also have, going out in 13 days, the 2,000 calls, so the par calls, the level I was just talking about, that psychologically very important level of 2,000. That's where the action was this week. 4,145 of those 2,000 calls going up this week. Pretty active all day, every day, except for Monday. Only a couple hundred on Monday, but 1,100 on Tuesday, 1,000 on Wednesday, 1,800 today, opening all week long. So folks piling into the 2,000 strike makes a heck of a lot of sense as we are hurtling towards that level, listeners. Are they buying it? Think we're going to blow through it by this time at expiration? Are they overriding it? Think we'll get this far but no farther? Either way, a lot of paper going up out there. And then right behind it, we have a tie for number 2, the 1975 calls going up 3,500 times. And also the 1900 puts also going up 3,500 times. The calls, again, trading pretty actively all week long, but the big days were Tuesday with 1,500 and 1,000 yesterday versus the 1900 puts that have kind of been trading scattershot all week long. 13, almost 1,400 on Tuesday, 1,100 on Wednesday, about 800 today. Looks like they were mostly closing earlier in the week and opening now versus the 1975 calls. They were kind of opening all week long. But we know the deal with gold. Gold, the action is farther out and farther up. So let's see what we can find out there, listeners. Oh, here we go. Forget all that near at the money stuff, listeners. What if I told you about the DEES 2025 3,000 calls? Because that's what was going up out there this week, listeners. They went up 2,500 times this week. By the way, if you're wondering, they have 865 days to go. It's a long time. They went up in all one block, 2,500 opening on Tuesday. If past is prologue, that's probably opening buying, listeners. That is all the OI, so nothing else on that strike. So there we go, Dan. There's our bit of weirdo upside paper for the metals this week. So, Dan, we hit on copper, we hit on silver, we hit on gold. I think we did a nice representative tour of the metals complex. Where should we hang our hat next, sir?
Well, shall we look at indexes? It seems like we can't be together without talking about the stock market.
All right, sir. To the world of equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. You know where to go to talk about some equities. Pop out of that metals tab. You're going to go up about 3 slots to equity indexes. And then from there, you're going to go to the U.S. Index E-mini. You'll probably start in the S&P 500. It is the big dog after all. Before we get to all that fun, let's look at some of the vol out there. As I mentioned, VIX looking pretty anemic out there. They're about 13.5 when we kicked off the show. Puts it down 1 3/4 points from where it was this time last week. VVIX, the vol of vol itself, still remaining firm at about a 97. That's up a little over 2 points from where it was this time last week. So threatening triple digits there, which is kind of interesting. It shows vol net is low, but the vol of vol itself is pretty high. Maybe vol poised to make some moves here. A vol Q, so the at-the-money vol of the NASDAQ, 1780, down about exactly a point from where it was this time last week. So obviously we have VIX outpacing vol Q to the downside. So that spread getting a little bit wider this week at about 4 1/4 points. That's wide for that spread. Usually we don't see S&P vol and NASDAQ vol that dissimilar, but right now it's what we got cooking out there, listeners. And in terms of action, how much action is in the S&P right now? 2.63 million contracts out there, listeners. So nothing to sneeze at when it comes to options vol. Dan, I'm going to start digging through this tsunami of paper to see if I can find any nuggets. While I'm doing that, why don't you regale our listeners? I'm sure they're all intrigued what you're thinking about the market at these levels, sir.
Well, I'm not sure if they're going to be intrigued, but the action that we're seeing today, and I think in a lot of these markets, it's logical, and it's acting normal. from my point of view. If you look at interest rates, what they're doing, their yields are coming off a bit on the notes and 10-year notes and 30-year bonds. That money we're seeing is flowing here towards the stock indices. There's also this calmness. Some of the anxiety that we've seen before in the stock market seems to have subsided for the last couple days. And who knows? It's a neurotic market, so who knows what will happen on tomorrow or on Monday. But we are seeing a market, as I mentioned before, that's feeling more comfortable when it comes to the Fed and the idea of a recession. And we are seeing signs that the economy is slowing down. We had PPI came out today, 0.1 year over year, less than the 0.4 expected. So that helps in that regard. Remember, it was 0.9 in May. So we've really come back to like a little over 2 3/4 of the year low. So that's comforting. Jobless claims down 12,000 to 237,000, less than the 25,000 they thought they would see. So that says something about the labor market. You know, we've had a labor market that's remained tight. So as the Fed's been doing its thing, it doesn't seem to hurt that. But there are some challenges there. If we think about what does that mean to us? Well, if it's a tight labor market and there's still demand for that, then what do companies do? They may pay more for a position so wages can go up. The people who are looking for positions say, well, if you want me, you're going to have to pay me more. Or people who are currently employed saying, you know, this inflation and your raise in my salary just doesn't compute. I need more money. And as we see that helps contribute to inflation. As that demand goes up or the wages goes up, the companies adjust their pricing to reflect that, which also helps fuel inflation. We haven't seen the Fed's interest rate doesn't seem to, at this point, choke off totally expansion. You were seeing in the residential market that it seems to be hanging in there. So what does that mean? It means that people have money and they're willing to spend it. And that's one of the things that you and I want to watch. In the United States, we are spenders. And 70% of our GDP is consumer spending. So that's why we look at consumers so much. You know, what's their confidence? What is their expectation for the futures? And these markets that we're talking about here, the equity futures market, give us an idea of the future. And that's what these reflect. What is the opinion going forward? And one of the beautiful things about futures markets, and especially in the indices, they are forward thinking. That's what we see reflected here, like we talked about before in terms of anticipatory. And I think what we're seeing here now, and I hope it continues, but what we're seeing here now is anticipation of potential Fed action going forward. And so what we're seeing in the S&P, for example, it's clean in terms of the way we're structured today. Same thing in the NASDAQ market. In the Dow, on the other hand, not the same thing. In the S&P, technically today, we are in an uptrend. In the NASDAQ market, technically today, if we close here, we are technically an uptrend. But when it comes to the Dow, it's got a ways to go yet. We need to get above or closer to 35,000 before we have that technical kind of movement in terms of an uptrend. We're at a minimum above 34,800, which isn't that far away. But what's interesting about it, where we're seeing these levels of commitment in other large cap indices, We're not seeing it reflected here in the Dow. So I'd be cautious in that. And what it implies for tomorrow is an inside day. These other indices, we're looking for a stronger close going into Friday. But you know something, Mark? The thing that I really find interesting, and I think that we all need to pay some attention to when it comes to indices, it's our friend, Mr. Russell. And if you look at the last 3 to 4 days, the Russell woke up before those other indices. It got stronger earlier. And what you want to pay attention to when it comes to this indice is that it can have a tendency to lead these other stock indices. So it's something I'd keep an eyeball on. It's worth watching, if not participating in that market. It became a technical uptrend yesterday. And now today, I thought we'd see more of an inside type day. We're not. We're seeing this market kissing its highs from yesterday. So, let's wait until Friday and see, do we see this confidence going into the weekend, or do we see it backing off, which implies profit taking or new sellers coming into the market? So tomorrow's action, I think, could set the tone for next week. So it's fascinating. And you know, Mark, I can't wait to hear what you have to say about these options because you add so much color to this attitude of the market.
Well, I appreciate that, sir. And you bought me just enough time to do a bit of due diligence on this tsunami of paper, 2.63 million contracts. It's hard to parse that many contracts in a few minutes, listeners. But I found a few interesting nuggets here. First off, everyone's wondering, what is the impact of 0 day and the very near-dated phenomenon that's going on in equities? And the answer is it's still very strong. If you add up the expirations, not going out that far, just add up pretty much all the ones going out in 5 days or less. So we have some going out in a few minutes. We have contracts going out tomorrow in 4 days and in 5 days. You're just talking 4 contracts. If you add up just those 4, you're talking 51% of the paper from this week is in those 4 contracts. So that, again, that shows you, again, that's not all 0 day because those contracts were trading all week long. It's more like a weekly profile, but still, that's very near dated paper. So you're talking almost exactly half of the 2.63 million contracts. All of that's going the way of the dodo in 5 days or less. So intriguing stuff out there, listeners, as we start rolling through some of these. You know, I've joked in the past that there is a lot of garbage put writing, picking up nickels in front of the steamroller that kind of obfuscates a lot of what goes on out here. And it still is happening. It's good to see that they have actually rolled up some of their strikes, and that shows you where we are in the market now. They used to sell the 3,600 puts for size. Now they're selling 3,900 puts, so they're getting close to 4,000, which is intriguing in and of itself, shows how much we moved in the S&P just over the last couple of months. If you're wondering, are there still the juggernaut, the tsunami of people coming in to just blast away on garbage puts? The answer is still yes. The biggest single trade this week is still 3720 puts. These ones going out in 4 days have gone up 100,000 times over the last couple of days. Paper just blasting away at those. 98,705 to be precise. That's far and away the most active contract on the tape. Once we roll past that to some more intriguing stuff out there, we do see some more, dare I say it, relevant paper going up, including the 45 half calls going out in a day. So 1 day calls. They've traded pretty actively all week long. Total of about 23,000 contracts for those on the week. Opening earlier in the week and then closing post Wednesday. Again, makes some sense. We saw a nice little pop. Not quite to 45 half, but pretty darn close. So people taking some of that money off the table, right? Hanging out about 39 right now in the S&P out there, listening. So you put those calls on earlier in the week, and that wasn't the most unforeseeable of moves. We joked about it on Monday. Man, we're probably going to see a pop if we come anywhere near the number they're predicting for this June CPI, and sure enough, they did. So market off to the races out there. Beyond that, we have people taking some profits a little bit farther out. Same strike, that 45 half strike, That's where all the upside action is right now. It makes sense. It's kind of pretty much the at-the-money strike right now. We saw people dumping those a little bit farther out, going out, oh my goodness, 8 days, all the way out 8 days. It's an eternity, listeners. Well, we saw people dumping about 13,000 of those 45 half calls pretty much all week long. The big day, though, was Wednesday again. Not surprising, nearly 10,000 of that 13,000 going up on Wednesday, about 1,600 today, and about almost 1,000 each earlier in the week. Again, folks just taking their profits, including a bunch of them after the announcement there on Wednesday. So again, a lot of paper that you might reasonably intuit if you were looking at this. Some other interesting trades going up out here this week, going a little bit farther out. 29 days. That's an eternity in this market now. 29 days, the 4,100 puts putting up about 1,100 contracts this week, including about 7,000 today. So a ton of 4,100 puts expiring in about a month going up today. Interesting. They've been opening all week long, but obviously the lion's share going up today. We also had that same strike, 4,100 puts going out a week later in 36 days, also trading pretty actively this week with about 10,000 contracts, including 7,500 today. So I'll have to dig into the numbers to see opening versus closing, but a bit of a roll maybe. The numbers line up. It's a weird time to roll at 30 days and then going out an extra week. But again, we have seen weirder things out there. So it's not all 0 day and front week. It's just half that. And then the rest kind of scattered throughout out here, listeners. So an intriguing array of paper to be found out here. How about the 4,700s in September, listeners? Those also lighting it up here this week to the tune of about 6,000 contracts. 2,500 yesterday, about almost 2,000 today, 1,000 on Monday, not so many on Tuesday. So looks like mostly opening on this strike. So 4,700 by September. Is that a bit of a bridge too far, listeners, or can we get there? Looks like some folks putting some money on that line out there. So again, intriguing stuff out here. I'm just looking for any other interesting and or aberrant paper. I think we hit on all the salient details, listeners. We could talk about 2,000 and 3,000 lots for days out here, but we have to keep rolling with the show. Dan, we hit on equities. We hit on the metals complex. What else is catching your fancy this week, sir?
Well, I have to tell you, the energy market is interesting. Ags are interesting. How about energy, Mark? Shall we take a peek at those?
All right, sir. You ask and you shall receive. To the Texas Tea we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the energy section. You know where to go for this. Go in that drop down, pop out of equities. It's an alpha order list. You just go up one slot to energy. Then we're going to kick things off, not in nat gas this week, but actually in the crude oil product family. Trading a little bit north of 77 right now, up about 3.25%, about 4.5%. Dan, I was on vacation for the last couple of weeks, and I could tell when I was filling up our rental car. I filled it up, and then I filled it up again less than a week later. And you're talking a 30-odd cent gap in that intervening period to the upside. So I could tell we were moving in WTI, even when I was on vacation, Dan. These things are inescapable. What is catching your eye out there in the world of all things Texas tea, sir?
Well, I guess when it comes to crude, let's begin with that base element that has influenced a lot of the markets that you and I looked at today, like when we talked about metals, and that is the U.S. dollar. We have a weaker dollar, and if you and I are a crude oil producing country, we get paid in dollars theoretically. I mean, right now, when you and I look at the way this market trades, it trades in dollars and cents. And we've seen Russia and China trying to get away from that dollar and using their currencies to do transactions. They've seen the U.S. sanctions and what they do. But so there's an influence of the dollar. But we also have concerns about production. OPEC said we're going to keep, or Saudi Arabia basically said we're going to cut 1 million barrels of production out there. And, the world, what does that mean, actually? And the world consumes a little over 100 million barrels a day. The United States, we consume around 20 to 23 million barrels a day. Producing double-digit production, there's only 3 countries that can do that. That's the United States, China, Russia, and Saudi Arabia that can produce more than 10 million barrels a day. And we've been close to 13 million barrels a day. And we do import oil. We import it from our friends in Canada and also Mexico. They have tar sands up in Canada that's difficult to refine. We have the capabilities in the Gulf Coast to do that. Same thing for Mexico. They have heavy sour crude, which is more difficult to produce, to refine. We refine it, and then we sell refined products back to those countries. So those are the 2 big import countries for the United States. So we have OPEC saying, we're going to cut back. Saudi Arabia says we're going to add 1 million barrels a day. So they're going to be producing around 9 million barrels a day. Russia said we're going to cut back 500,000 barrels. So people are saying, geez, supplies may be getting tight. They want to see higher prices. At a minimum, they'd want to see $80 a barrel. I'm talking about OPEC and other oil-producing countries. Saudi Arabia would really like to see it. A lot of people say 80, but actually at 100. They balance their budget at 100. So we are seeing some movement up right now. Is that expected to continue? Yes, I'm still a little skittish about this marketplace in terms of the supply and demand scenarios. I think we are somewhat fairly valued in this market. Now, trading above 75, which is what we're doing right now, implies further movement to the upside. I just think if you're on the long side of this market, you should be careful. Nothing telling us to be a seller, by the way. Nice, clean move today, looks healthy, no sign of weakness and no sign of sellers entering this market. But just like with the other markets, how we finish up on Friday could give us some clues about the confidence of the crude oil market. So it is a very interesting setup that we have. We have a few different dynamics that seem to have some influence here, the dollar to supply and demand for this product. So it's an interesting setup, and I can't wait to hear what you had to share with us, Mark, on the options.
All right, Dan, let's see if we can find something fun to merit that lead-in, sir. Let's see. Obviously, right now, 77 and change is where we're hanging out in that front future. Pretty active week on the WTI front, closing in on 550,000 contracts. That's around $1.50 more than we normally are this time of the week, so pretty active. And of that, trading like an equity, 43% is going up in the contract that expires in 4 days. So getting a little bit of not quite 0 day, but very near dated phenomenon here in WTI. So everyone wants to be where the action is, which is very close to the fire. High gamma action out here right now, listeners. What is the vol in these contracts? Coming in quite a bit on that 3 to 4 day contract. The vol, such as it is, kind of meaningless, that near dated, but c'est la vie. About 24 2/3, off a little over 4 points. If we go a little bit farther out, let's say we go out about 22 days, the vol's hanging out at about a 30, coming off about 2 points or so. So intriguing. Get a little bit farther out, the vol is a little bit juicier, but still well north of what you're looking at in some other products. 3x what we're seeing in gold, and roughly 2x what we're seeing out there in equities right now. In terms of the action, over 500,000 contracts, the big trade this week was the 75 calls. By the way, really quickly, let's break down the skew here in that 4 day to go contracts. I think near dated skew can provide some interest. Last week, the puts were flat. The calls, about 3% bid. This week, it's all puts now. About 6% bid are the puts with 4 days to go. The calls, 3.9% cheap. So that skew has swung completely from a bid to the calls to a pretty aggressive bid to the puts and a decent discount to the call. So I guess folks are taking that move we've got now and saying, hey, let's fade it. Maybe we're going to turn back the other way. Either way, it was the 75s expiring in 4 days that were leading the dance this week, listeners. About 17,000 of them going up this week. Trading actively all week long. 6,700 on Tuesday, 4,600 on Wednesday, 3,300 on Monday, 2,200 today. Closing just about every day. So it makes some sense as we move toward and through that 75 strike. Folks are going to take some of their profits off or also maybe scramble to close some shorts they have. Either way, a lot of closing paper on those calls. Let's see what else we find out here. Listen, also the 77's trading about 16,000 times this week. Those are opening all week long, so maybe we have some folks, the numbers don't line up one-to-one, but could have some folks maybe taking off some 75s and rolling up to some 77s. If that's the case, they may have to roll again because we're already north of 77 right now. But intriguing how the paper lines up total numbers-wise, if not on a day-by-day comparison. Then we go a little bit farther out. We get to the 80 calls out there in September. These have about 35 days to go, listeners. They traded 11, almost 12,000 contracts this week. Again, pretty much closing all week long. 4,000 today, 4,300 yesterday, 2,300 on Tuesday, a little bit less than 1,000 on Monday. Again, folks bailing on these all week long, which is kind of interesting given where we are right now, 77. And then also, I missed these, listeners. How about let's go a little bit farther out and up. Let's go to the D-SPARs, the D-100s. Those were pretty active this week as well, going up almost 13,000 times. The big day today, 5,600 D-SPARs trading today, 3,500 yesterday, 2,300 on Tuesday, 1,000 exactly on Monday. So intriguing. Looks like they were mostly closing all week long, but again, there's about 38,000 open on this strike, so it could be some folks deciding, hey, this little rally we're getting, maybe that's as good as we're going to get. Let's take some of our long pars off the tape, or maybe they're short a ton here and they're scrambling to buy them back. Let's look really quickly at the skew. Maybe that'll provide a little bit more insight. Last week, the calls were 5.2% cheap in December. The puts were 7.3% bid. So talk about a complete inverse of what we had in the near-dated contracts. The weeklies was all calls all the time, and now it's swung to the puts. But last week, the bid was to the puts in December as well, the discount to the calls. And it's pretty similar, but a little bit more extreme in both directions this week. The puts are now 8% bid in December, and the calls 7.1% cheap. So folks were bailing probably some longs that they were taking off, given a little bit of this skew action out here. But again, it's hard to read that much through the tea leaves out here, listeners. But intriguing stuff to be found across the board here in energy. All right, Dan, unfortunately, that music means we've run out of time for this episode of TWIFO. We squeezed a lot of living into an hour, Dan, but even still, only like 3 complexes. Shows how much was going on this week, sir.
It was interesting. Yeah, I can't wait till next week or tomorrow.
Are you inviting yourself back next week already, Dan? All right, we'll see what I can do. We'll have to move some people around. I'll have to tell them, hey, you know what? You got to get bumped. No. Dan wants back on the show next week.
No. But
hey, we missed you for a couple of months, so we got to get you back into the rotation again, sir. We let you rest long enough. Now it's everyone else is taking a break on the summer, not us, Dan. We're cranking out the content. Speaking of cranking out the content, if folks want to see the content you're cranking out when you're not on this show, where should they go? What should they do?
Well, they could go to dangramza.com. There's a free video there that looks at 22 different markets. Stock indices, currencies, interest rate, metals, crude oil, energy markets, and ags. And the intent behind that is that if you've never looked at futures, a place to begin is just watch them. Do what you're doing right now by listening to what Mark has to say, because it paints a picture of the dynamics of these markets. So the free video is a way to just see what they're doing. And there's green lines for buy and red lines for sell. These are not buy and sell recommendations, but these are ideas that I just want to share so you can see how someone, or in my case, me, what I'm looking at and what I would consider a buy or sell level from my point of view. And there's also a course there that discusses the techniques that I use, and then also on trade management, that's a part of that. And there's a more advanced video that goes into detail on these markets. But anyways, check out the free one. It may provide some insights that you might find interesting. If you only trade equity indexes, for example, there are a lot of other markets, as Mark has just taken us through, and you may find that crude oil market that we just talked about may be of interest to you. And Mark, that's what's so great about what you do, because you broaden everyone's point of view of the opportunities in the futures market because you cover so many different markets. I think that's just terrific. So a pleasure being with you today, Mark, and thank you for those of you who have been listening.
Well, I appreciate that, Mr. Dan. Check him out at dangramza.com. Those are great videos. If you even just, as Dan mentioned, just starting to dip your toes in these markets, those videos are a great starting point to help you do just that. And of course, if you want some data to back up your trading, cmegroup.com/TWIFO is the place to go to get all the data we talked about today and a whole heck of a lot more. Remember, those reports are running 24/7, so you can check them 6 a.m. on Saturday if you are so inclined. They're there for you. cmegroup.com/TWIFO. That's going to do it for us here on the show and indeed on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. Talk a little bit of vol on volatility views. After that, for all you cool kids in the secret club, back again for options oddities. Got a feeling some weird stuff's going to make it on the show this week. Got to tune in. TheOptionsInsider.com/pro is a place to get access to that show and all the other pro content. Then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.